In today's video, I'm going to be breaking down the exact strategy that I used to turn $500 to over $2,200 in the last 3 trading days we've had this year. And not to mention last year, I flipped 8 separate $500 accounts to over $30,000 using this exact strategy. And don't get me wrong, there's some challenges to the strategy, but it's pretty dang easy. And I think I can teach it to you guys in this video so that you can build off of it and hopefully add this to your arsenal to make some moolah. If you don't know who I am, my name is Noah Dearmeyer, and I am a crypto trader for the past 6 years. I've been using this strategy, and let me tell you, this strategy prints. Before we jump in the video, if you get value from this, go ahead and number 1, drop a like, subscribe to the channel. Why not? Support me for this free content I'm giving out. And then number 2, I have a free Discord, not here to sell you anything. All you have to do is join the Discord. We do free live streams, education, signals throughout the day, because my main goal as an educator is to have impact on others, and on top of that, teach a man to fish. So why don't we teach you how to fish today with this stupid, simple strategy? Let's jump in. All right, guys, now that we're over to the charts, we're going to start simple. So we're going to start on a higher time frame. And on the higher time frame, we're going to be looking for fair value gaps, liquidity sweeps, something to cause a trend break on the lower time frame. Once we find these levels that we're looking to trade out of, we're going to step down to the 1 minute, okay? And we're going to say this chart right here is the 1 minute chart. And we want to see it building an uptrend like we have right here. You can see every time we get to this trend line, we're showing strength off of it, creating higher highs. And then we want to see it tap into that higher time frame analysis, those higher time frame gaps, sweep of liquidity, something that causes this trend line to break. It's pretty simple if you think of it like that. Something has to cause this trend line to break. It can't just break on its own, because we don't want to take that. We want to have higher time frame confluences so that we can catch these 1 to 6s, 1 to 10s, 1 to 20s. That is the way to do it right there. So once we have our higher time frame analysis, let's say there's a gap right up here that we're just getting into. We want to see it tap into it and have a rejection out of that trend line. We want to see it leave behind displacement. Displacement is a high impact fair value gap, breaking that trend, wanting to show displacement from that current trend and from current price action. So once we get that breakthrough, we could trade it in an inverse fair value gap. From right here, this previous moves, inverse fair value gap with a fair value gap, beautiful, perfect, we love that. Or it could just be a high impact fair value gap that breaks the trend, changes the state of delivery, changes the character. We're trying to find momentum shift in the market to take a high profitability trade. That's the whole goal, high win rate, high profitability. So if it's not there and you're tilting your head like, is that a high impact? Is it not? It's probably not, and you probably just shouldn't be trading. So you need to understand when to sit on your hands, when to act. And it all is going to come down to the high impact break. On top of that, the higher time frame confluence. How strong is that confluence? Did it tap into that gap enough to cause the rejection to break this trend, creating displacement? We want to see it come back and retap into this displacement, possibly allowing it to retest the bottom side of the trend. Because if we have strong trend lines, it oftentimes will want to retap the other side of that specific trend. So we have to allow the trend break. So let's say the displacement's left behind right here. We want to see it tap back into it. As soon as we close below the low right here of the bounce up, where our entry is right here, as soon as we get a close below there, we are going to move our stops to break even. Now, you might be asking me, well, where are my stops even going to be in the first place? So let's say there's an inverse fair value gap here, paired with a fair value gap right here. So let's say our entry was right here. We tap back into it. We're going to have our order set like this. We're going to be looking for a short position. We're going to have our stop loss, allowing it to retest the bottom side of this trend line. So outside the fair value gap, outside of the trend retest, because we want to allow this to possibly come up here and retest the trend line before rejecting, because strong trends like to do that from time to time, and we have to allow for it. We have to allow price to breathe. And then what we're looking for is for us to sweep out this low right here. Once we sweep this low out and get a candle to close below that, we're going to be moving our stops to completely break even, eliminating all risk. And now, where is profit targets going to be? Because a lot of people have trouble where profit targets are. And you're going to be looking for your main sweeps of liquidity, because liquidity is how the price moves. It has to hit certain liquidity points to continue in its direction or continue on a new trend. So what we're going to be doing is targeting liquidity zones that we set on the way up or on the day. So you can look at it like this. We could be taking TP1 there at that low, key liquidity points right there. You'd have to be looking at the charts for these key liquidity points. And something that I like to do whenever I'm in a trade for where I'm looking to TP is where could price possibly reverse from? Okay, so we got this. We got the close below this level. Stops are at break even. Where is a level that price could even bounce off of and want to sweep out all of these highs that we just said? So we have to be looking at it from a long and short side trader. We can't be so focused on our trade. We have to be looking at the other side. What would a long be looking at in these levels? We have to be thinking of that side. Yes, we are short. We have to be thinking, what would the longs be thinking? And that kind of helps me place my take profits throughout the way of understanding where a good level price could respect and price could sweep and want to continue higher. So that's going to be where I'm placing my TPs. So as soon as we get that break, stops are at break even. But as we get pushes down and breaking more levels, I'm going to be trailing that stop loss. I'm not leaving it at break even. I'm going to start trailing it the further this pushes down. At closer we get to our TP, I'm going to keep trailing my stop loss to lock in some profit, eliminate all risk, and now I'm just in the profit. Now it allows me to just be risk-free in this trade, clears my mental side, because regardless, I'm going to make money in this trade, and you want to trail it with decent sizing. You don't want to trail it too tight, smother your trade, and get stopped out, and then it plays out. So you want to put your stop loss wherever there's a pump back up and then a push down, or a fair value gap candle. Keep following the fair value gaps to the downside with your stop loss all the way until we either hit TP or hit that stop loss. One thing I also want to mention, it's not bad to take partials. I take partials. I teach everybody to take partials. You know, taking 50% at a 1 to 4 risk to reward is perfect. There's nothing wrong with that. So you have to understand, you want to average out of your position, trailing your stop loss, eliminating risk, but make sure it's not smothering your trade, because I see a lot of traders smother their trades because they're trailing their stops just a little bit too tight. Instead, let the trade play out, take partials, keep your risk in a good level, and then trail it at a good pace without smothering your trade. Now that you guys understand the basics of the strategy, I'm going to show you a real life example of this strategy playing out and what you guys could have taken if you understood the strategy. Now, I didn't take this specific one because it is Saturday, and I flipped my small account from $500 to $2,200 in just 3 trading days, Wednesday, Thursday, and Friday. So I decided to take off today, get a little breather, getting ready for this next upcoming week. But here's a trade we did miss that absolutely was stunning. Now, first things first, we're going to step up to the higher time frame like we said in the strategy. And you can see on the 1 hour time frame, we are tapping into a 1 hour bullish gap right here. We touched the midpoint of that fair value gap. So now we're going to step back down to the 1 minute. You can see we tapped the midpoint of this 1 hour fair value gap. And we can see that we have a clean downtrend forming with multiple touch points. Every time we touch that trend, we have a sharp reversal out of it. And then you can see we have this one last push down from the trend retest right here. I'm going to delete this 1 hour fair value gap so you guys can see it a little better. But we get this one last push down. We inverse this fair value gap and break the trend with this displacement. Now, this wouldn't be a high impact break right here, but instead we could target this inverse fair value gap that we set on this last move down. We decided to push strong off of this trend line, breaking it, retesting the midpoint close to of this inverse fair value gap. Right there would have been the entry touching into this fair value gap. Risks outside down here. Let's play it out right here. So we can say we got a decent entry on that. Right here would be where my stops are, allowing it to retest the trend line, also to hold the fair value gap that we're in, not smothering our trade. And then I would have looked for TPs at the sweep of these highs right here, because right here I can see is a strong liquidity level that we want to sweep before continuing on what we're doing. We also have the 20 EMA on the 1 hour time frame right here that you can see this blue line. So that is going to have some sort of resistance as well. Luckily, this trade played out beautiful. I mean, it literally, after hitting our entry, just decided to pump to full TPs. Boom, right there. Now, let's break this down. Where would stops be break even? Stops would be at break even as soon as we get a candle close right here. So on this push all the way up to here, stops are going to be break even. And instead of break even down here, let's say this is my stop level. As soon as we get this huge candle to pump up there, I'm going to trail my stop loss in the profit all the way to probably about the low of this wick right here. Reasoning, if we pull all the way back, we have a couple inverse candles right here. We have a fair value gap right here. This is going to be a heavy BPR, balanced price range, multiple fair value gaps in this price, allowing price, if we wanted to, come to retest this area to continue to push higher. But guess what? We didn't have to worry about that. This trade went straight to TPs, swept all the liquidity we wanted to see back here, and all out. Boom. I don't care what price does after this. This was the strategy. This is what we were looking for. We got what we were looking for. So price could continue twice as high, 3 times as high. I don't care, because the strategy I have teaches me to do specific things that'll save me more times than help me holding on. So yes, I could have left a runner to continue to push higher, but these were my TP levels that I set. I planned my trade before taking it, and then I take it, and then I stick to that plan. I don't adjust the plan as we go. I'm going to stick to where my TPs would be. We hit TPs, we pulled all the way back. If I didn't TP up here where I wanted to, I'd be sweating a little bit. This is a pretty heavy pullback. Luckily, in this BPR that I talked about, we did get some more legs, sweep a little bit higher liquidity. And then you can see in this area that I wanted to see liquidity be swept from back here, we decided to push all the way back down, and it would have stopped me out right there before trying to pump back up. So that's why TPs are at where they are, and that's where I would have set my stop losses. All right, guys, that's it for the video. Hopefully you guys enjoyed. It was just a Saturday night video that I wanted to film for you guys, kind of understanding why I trade this strategy, how I trade this strategy, and why this strategy is so important. It's helped me grow so many small accounts to over $30,000. And I truly think if you lock in and learn this strategy, learn the discipline it takes in trading, because strategy is just 20% of trading, you guys can truly be profitable in trading. Stop listening to all these gurus with fake Lambos, fake rentals, because listen, that's not going to work. All they're looking for are course sales. So hopefully you guys enjoyed this free content. I have so much more inside the Discord. If you guys want to join, check out the description of this video, and you guys can truly start learning from somebody that's not flexing all these fancy things in your face. Instead, I'm flexing value that I've learned in the past 6 years of trading. So hopefully you guys like this video. Make sure to like and subscribe to the YouTube channel for more videos like this. And if you want to take it one step further, go ahead and join that Discord. Peace, guys.